Today we had high volume selling after rejection from resistance going into a huge data release with tomorrow's unemployment rate. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was down 1.84%, and we did get that sharp rejection from the resistance test up here at SPY 400, and we did break down below that low at 398, which meant we were coming back down to the 200 daily moving average at 393, and we did undercut that level by a few dollars. So below 393, we have the bear market resistance trendline breakout, which is down here right around 390. And we are starting to see higher volume selling with today's price action. Now I'm going to do a quick analysis of the financial sector because I know a lot of you probably don't even watch that portion of the video. So we're going to jump to that real quick, and I want to go over something that I talked about on Monday. So on the financials, on Monday's video, I drew this arrow path back down to the rising 200 daily moving average before we would likely get a bounce. And you could check Monday's video to verify that this is true. So there will likely be a lot of talk about how this was an unpredictable drop and nobody saw it coming, and it's this huge black swan event in the financial sector. But if that were true, ask yourself how I was able to draw that path lower on Monday before we had a single red candlestick on this chart from the resistance level. So yes, today's price action in XLF was absolutely atrocious, high volume selling, and we did slice down through some critical support and we're very oversold. But what I'm trying to show you from this chart is it's still in the realm of possibility that this was a predictable move and we could still go higher from this level. So jumping back over to SPY, you instantly need to be a lot more cautious below the 200 daily moving average, but we do have a potential. This is a bear market breakout from the bear market resistance as long as we are above the bear market resistance trend line, which could now be support. So do not be surprised if we bounce off of this support level and then make another attempt to break out of that resistance at SPY 400. But of course, if we break down below it, we are very likely coming all the way back down to 378 to 380. So you manage your own risk and decide how to be positioned here. And if you're a day trader, it's very simple. Each and every day, you just go back to cash and trade what the market gives you. If you're a swing trader, you need to plan ahead and manage your risk accordingly. And right now, that is going to be managing a risk below SPY 393 because there is no guarantee this support at 390 is going to hold up. And you cannot just assume support is going to hold. As I always tell you, follow the trend. And this is another lower low after another lower high. So this is a downtrend. So you need to be very cautious if you're taking long trades trying to catch a falling knife. Now, with that being said, if you are a long-term position trader, there's no reason to panic sell. Make sure you are following a plan. And if your plan tells you to sell, then go ahead and sell. But don't simply just sell out of emotion. You should be following a plan. So this is going to be a very volatile time and a very emotional time if you don't have a plan. Now that SPY is starting to break down and we're getting that rejection from the negatively sloping 20 daily moving average. So it's a very critical moment in the S&P 500 and across the indices as a whole because this is going to decide whether or not this year is going to be a bull market year or a bear market year. Nobody knows for sure, even though there are plenty of strong opinions out there. There are a lot of people that are expecting SPY to go back down to brand new lows this year. And on the other hand, there are still plenty of people who think it's possible for a bull market. We'll let the price action do all the talking, and right now the price action and the trend is still lower highs and lower lows at extremely critical support zones. So going into tomorrow, we are very likely going to see a very large move after we get the data, and that large move should make or break the bull case because we are either going to get a strong bounce out of this support level and never look back, or we are going to slice right down through it and go down towards SPY 380. We'll let the price action do all of the talking, and we will trade only what the price action is giving us. On the NASDAQ 100 triple Qs, we were down 1.73% today, and the triple Qs finally filled that gap down there right around 294, and we did come back down to the rising 50 EMA. Now keep in mind, the triple Qs are relatively the strongest index because they did not hit the 200 daily moving average today, and every other index did. So while we did fill the gap at 294, we did break down below the neckline of support at 294, and we're sitting right on top of the 50 EMA at 292. Below that, we have the 200 daily moving average at 290, and then below that, we have the gap fill at 288. And if we lose all of that support, we are very likely going to flush down towards the gap fill at 273. So as I said with SPY, this is make or break support zones for the bullish scenario because if all of this support fails, we are very likely going to much lower prices, which is going to look like a bear market. Now, as I said, you should let the price action do all of the talking, and the triple Qs clearly got rejected from the negatively sloping 20 daily moving average and the resistance zone between 298 and 300 that we just talked about last night. The bulls had to close above 300 to get the confirmation of a breakout, and that's exactly where we saw the rejection from. So while the triple Qs don't have the lower low just yet, we do have the lower low in SPY, so that's going to be very important to watch this support zone on the triple Qs at 290 to 292. If we bounce out of this support zone and break above 300, that is incredibly bullish, but we need the price action to confirm it. If we're going lower, we'll break 290, fill the gap at 288, and if we continue lower after that, we will be looking for a strong downtrend into the 270s. On the Dow Jones, we were down 1.65% today, and the Dow Jones hit that 200 daily moving average at 324 and closed just a little bit below it. Remember, the 200 daily moving average is nothing special and there's no guarantee we need to close above it. This is simply a support zone you want to pay attention to around 324. If we get a second day in a row closing below the 200 daily moving average, especially after the data release tomorrow, we are very likely trending down to fill the gap at 311. So it's a very clear price target of 311 if we get the second day in a row closing below 324, and we're going to have strong resistance at 327. In order to get bullish, we need to break all the way back above 335, and that is now a long ways away, so it's a lot of risk being a short seller down here. Unless we get rejected from 324, then we'll be looking for 311. On the Russell 2000 IWM ETF, we were down 2.78% today, and the small caps broke down through that support at 185 and instantly flushed down to the rising 200 daily moving average at 181. If we go much lower, we'll be looking for the gap fill around 180.6, and then from there, we're very likely due for a dead cat bounce because we're very oversold. We're way outside the lower Bollinger Band, and we flushed down through that support, so there is a good chance if we do fill that gap that we could see somewhat of a dead cat bounce before we go any lower. But looking at the chart, that's a very clear false breakout from the resistance trend line and a very high impulsive sell-off, so this is going to be bearish until we can break back over 188. On the ARKK ETF, we were down 4.16% today, and the ARKK ETF is also getting rejected from that resistance, and we are breaking down towards the support at 37. Remember, below 39, we have the lower high, lower low downtrend, which means we're likely going lower until we snap out of the downtrend, and right now, the next strong support level to pay attention to is right around 36.88. Below that, we come down towards 34.6, which is a huge move to the downside, so be very cautious if we break below 37. The bulls will need to break all the way back above 41 to reverse the downtrend, so if you're waiting to get bullish, just be patient and wait for a confirmation of a trend reversal. On the VIX, we were up 18.32% today as the VIX is skyrocketing out of the lows and the VIX is back above 22. And anytime the VIX is above 20, we have a volatile market and you need to be cautious. So this is obviously a lot of fear entering into the market today, which means you instantly need to be a lot more risk off and be patient and wait for confirmation in the price action of where we're going from here. If we do see the VIX getting crushed back down below 20, that will be a bullish indication, but this is a very large spike in the VIX and not one that I would take lightly. On Bitcoin, we're currently down about 5.6%, and Bitcoin is starting to flush down towards the 200 daily moving average, which is exactly what we were expecting with this current downtrend. We have the lower highs and lower lows, so there's no reason to be bullish until we break out of the downtrend. So look for that strong support zone right around 20,000, and if we break below that, we're likely going to 19,000. We need to break all the way back above 22 to 23,000 to snap out of this downtrend. On Google stock, we were down 2.05% today, and Google had the perfect rejection from resistance all the way back down to the gap fill at 92, and that is exactly what we saw with today's price action. So with Google, we need to start finding support soon and then bounce back up and take out this high at 95.6 to confirm that we have a higher low, higher high, and that should be plenty of indication that we're going to start running higher towards 102. However, if we continue lower, we need to hold support at 91, and then below that, we need to hold support around 89. Otherwise, we still could revisit the lows at 86. On Amazon stock, we were down 1.78% today, and Amazon had that very clear rejection from the negative 50 EMA and 20 daily moving average, and we're right back down towards the support zone at 92. Below this support, we could go fill the gap at 90, and then below 90, we have a gap at 86, and the previous lows at 82. To get more bullish, we need to break above 98 and then 102, and that should be the buy signal that we're going to 109 to 115. On Microsoft stock, we were down 0.54% today, and Microsoft had a very clear rejection from that trend line yet again, which is right there, right around 260, and we're right back down to critical support at 252. If we break 252, we're coming back down to 246 to 242, and if we could break out above the resistance around 257, we can go fill that gap at 262. On Nvidia stock, we were down 3.08% today after a very clear rejection from our price target at 244, where we hit the price target and instantly found sellers, and we're back down below the support breakout at 238. If we continue lower, we need to hold support at 227 to 230, because if we break that, we could go down and fill the gap at 211, and the bull breakout at this point will be above 244 to go fill the gap at 258. On Tesla stock, we were down 5% today, and after that clear breakdown below the support at 183, we hit the next critical support level at 173. If we continue lower, we have strong support at 167, but if we break all of that strong support in this zone, we're going straight down to the gap fill at 146. Remember, this is lower highs and lower lows, so if you are still bullish on Tesla, you are still playing with fire because this is clearly a downtrend. We need to break back above the resistance zone around 198 to break the downtrend, and then we could start going back into a bull trend, but we need the price action to reverse this downtrend of lower highs and lower lows. Look for that resistance level at 183 now, because above that we could start to build a positive trend, but it's going to take a lot of bulls pushing higher at this point. On Apple stock, we were down 1.49%, and Apple finally filled the gap down there at 151, so we can delete the gap fill, and we are sitting right on top of very critical support at 150. If you look at this chart, it is still possible this is an inverse head and shoulders if we can hold the support at 150, but if we break the support at 150, we're looking for the gap fill at 146. So instantly risk off in Apple below 150, but if we bounce from 150, we'll be looking for a retest of the resistance at 156, and a break of 156 will be a very bullish breakout that we're going towards 170. On the financial sector, we were down 4.06% today as we're very clearly hitting our downside price target and then some, so we're going to need to see a very sharp reversal in the financial sector to support the buyers and have any hopes of a bullish scenario in the SP 500. So watch the financials very closely because this is a very high volume selling day and we are slicing down through the 200 daily moving average. On the industrials, we were down 1.47% today as we're getting very close to filling the gap at 100.5. The healthcare sector was down 1.01%, breaking down to another lower low, and we're continuing into this very strong downtrend as long as we're trading below 130. The energy sector was down 1.41% with that clear rejection from the moving averages, and we do have the bear trend, which means we're likely coming down to 82.6 and then 80.5. So jumping back over to the S&P 500, tomorrow is going to be a very critical day with the unemployment data release, and we are sitting on top of very critical support with the 200 daily moving averages. Another day closing below the 200 daily moving average means there's no buyers in this zone, and if there's no buyers in this zone, we are very likely going to much lower prices, so manage your risk accordingly and make sure you are prepared for any scenario. We still have lower highs and lower lows on the daily chart with SPY breaking down to a lower low today, so be very careful trying to catch falling knives, and if you're buying long positions, make sure you are managing risk very tightly because high volume selling could be right around the corner. If you want to come trade with the Stocks Channel Trading Discord community, you'll get access to all of my intraday updates and analysis, and you can trade with other price action traders in the Stocks Channel community. Find out how to join the Discord server by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.